Hey guys, welcome back to the TradFi Bitcoin Club. So today we will be discussing Bitcoin business models. So here they have given an analogy to understand the whole Bitcoin ecosystem. So they are calling it, taxonomy. If you have like recall your 10th class or maybe 12th class biology, I think many of us have studied biology till 10th only. Um, but uh, taxonomy is something like, for example, I was doing ChatGPT. Let me share that with you. So here. So taxonomy is this kind of thing where it's visible, right? So where you identify a particular species from all of what you call biological taxonomy. So basically, this is taxonomy. So I asked him what is the tax. I knew this Homo sapiens, but this is total taxonomy. Like kingdom is Animalia, phylum is Chordata, class Mammalia, order primates, family Hominidae, genus Homo, and species Homo sapiens. So uh, I have like I was able to recall some biology through this, but um, core data is something where the mammals who have a spine, if I can recall, mammalia is basically mammals. Primates is closer to us, so erectly standing, maybe apes, gorillas, and all these kinds come in here. Then hominidae is much closer than genus and then species. So uh, this is kind of like their analogy, which they thought. So here it's about Bitcoin. Now, going into Bitcoin is kingdom is the entire financial system. Phylum is digital assets. Now, don't ask me what is like phylum and class and order because I also don't remember. Maybe if you want, you can go and chat GPT that. But yeah, it's kind of classification where kingdom is like whole circle, then phylum is uh, a circle within the circle, then that circle keeps getting much smaller, smaller and smaller and smaller as you come down the order. So digital assets class is Bitcoin, then order. Order is basically different branches like mining, financial services, infrastructure. Then family comes specific segment. So in this order, specific segment, treasury companies. So maybe this comes under financial services. Then genus, strategy side style leverage treasury. So ChatGPT is kinda like personalized because I am doing much research in treasuries and more on financial services. He has by himself taken this example and one specific company example, single firm. So in genus he has said that strategy styled leverage treasury. In species maybe you can call it as strategy only. So this is what taxonomy is. There nothing is related to tax. So when I read this word taxonomy, I thought, is it something related to tax? But yeah, it's not. So that's why I went in ChatGPT and asked that what's this thing and what are they doing in here. So basically, this image is very important to understand the whole base. So this is uh, basically the trunk of the tree. Bitcoin is the middle portion. Then the second layer is Lightning Network and Arc. The outer layer is Spark. So the closer you are to the center, the more technical and what can we say, a protocol based the thing is. So because it's a protocol, maybe not much can be done to generate revenue out of this. Um, there are kind of examples through which we can generate revenue in proof of work. So in first example, maybe we can come to it later in the session. But yeah, uh, the closer you are to the center, the more technical and like here they have mentioned. Where is that sentence? Yeah, Bitcoin adoption is driven directly or indirectly by individuals interacting with the network. Direct interaction requires a moderate to significant understanding of open source software. So, if you are studying these things like Lightning Network, Bitcoin, Arc, Spark, so you will need this direct, like moderate understanding of open source software. So, if you like don't have moderate understanding these protocols will be kind harder for you. But then comes these branches which can be understood by a layman, or maybe who do not have uh, they have said it as typically user with lower levels of technical acumen. So these branches can be understood by people like me, like who don't have any technical or open source background. So these branches are a separate thing. Now, one more thing about these branches, the higher the branch is, the better the product market fit for that branch. So centralized financial services, it has a better product market fit than hardware manufacturers, and better product market fit than node infrastructure. So when you are seeing this lending and asset management, it's just getting started. That's why it's like down here. So PMF, that is product market fit, is similar to sunlight. So basically, the branches who are at the top, they have kinda found their PMF, and that's why they are up and going up. But the other things which are here displayed on this tree are kind of somewhere in the middle, or they are yet to figure out their product market fit. But yeah, so here they have mentioned some branches may grow only to perish as faster growing branches block their sunlight. So if some of these branches find crazy PMF product market fit, then some other branches go beneath and their growth slows down. So this is how like they are explaining this. Others might grow rapidly but unsustainably, only to fall off during a storm. So it's not certain that if a certain branch is going up and uh, maybe in some downturn or something, black swan event happens, and like centralized financial services, if they got hacked and something happened, then whole branch is cut off. So that's why they said it like others might grow rapidly but unsustainably. So high growth is unsustainable. Branches with access to adoption today may branch off in a completely different direction tomorrow, but they would never have gotten there without initial sunlight. Most importantly, without branches. The trunk will not grow. So basically, without these branches, the trunk cannot grow, and without the trunk, branches cannot grow. So it's interconnected system here. Then, from the investor's perspective, our tree analogy reveals ample opportunity to invest in promising branches of the Bitcoin ecosystem while capturing the potential of one of the fastest growing trunks in financial history. Branches grow faster than trunks, and without them, trunks wither and die. So basically, without trunk, branches can't sustain, but branches are much faster uh, growing than trunk. So that's why there's a reason to invest in this brand. Like from an investor point of view, there's a reason to build some business around these branches because they are growing faster than the trunk. So trunk is basically Bitcoin. So what are the goals? Goal is define Bitcoin ecosystem, highlight recent changes within each sector of the ecosystem, highlight emerging business models, identify ecosystem pain points, and call to action. Now, they have classified companies into three categories. One is Bitcoin only companies. So companies exclusively centered around Bitcoin, like they do nothing else except Bitcoin. Then comes Bitcoin focused companies. So they give access to Bitcoin, but also do like crypto or non-crypto products as well. So maybe these financial services and all comes under here, Bitcoin focused companies, because they are also doing crypto or exchanges. Exchanges is a good example where they are offering all kind of different cryptos, but also they are offering Bitcoin services. Then third is Bitcoin enabling companies, maybe a company like Steak and Shake. So they have started to accept Bitcoin, but as a payment, but they don't build something on Bitcoin. So they are kind of Bitcoin enabling companies. The taxonomy below defines Bitcoin businesses by their functional characteristics or primary source of demand. The examples included are illustrative yet not exhaustive, highlighting key distinctions within the ecosystem. So this all is the Bitcoin ecosystem, like protocol nodes, protocol middleware, native applications and platform. Then comes consumer financial services, institutional financial services, physical infrastructure, the Bitcoin economy. So all these sectors are again further studied. So instead of like wasting our time here, I will come directly to protocol nodes. So protocol nodes, POW miners, basically all miners like Riot, Marathon, Core Scientific, Clean Spark, Iron, Gridless, Barefoot. So these miners, public companies, they come under this POW miners, transaction ordering and block creation for the Bitcoin blockchain. So all of these examples of miners comes under proof of work miners. Then comes validators. Validate that transaction, follow protocol rules. Now here I don't have an expertise to comment on these like Babylon stacks. I have heard about stacks. It's L2, but they have also their own token. So I'm not sure how they are calling like L2s have their own token, but for example, Lightning Network. Lightning Network is also an L2. They don't have their own token, but these stacks, they have their own token. So I think I'm not a right uh, person to comment in here. Then Alpine bridge operators. I'm not sure what they do. Sequencers, order validated transactions for an L1 commitment batches. Citria, Alpine, Lightspark operator. Functionaries, signers of bridge and block transactions for sidechain protocols. Liquid and Rootstock. So I have a rough understanding of Liquid. So Liquid is a sidechain on for Bitcoin. Rootstock, I have not I have heard, but I have not like gone through. So uh, I think I should not comment. Then comes mints and guardians, signers of bridge and block transactions for federated eCash protocols. Now Fedimint and Cashew. So Fedimint is uh, like kind of a if I'm not wrong, it's kind, yeah, if it is here. Lastly, and certainly not least, eCash Mints made significant progress this year. Fedi launched its Federation Setup service, and there are now 32 public cashew mints, eCash Mints. Maybe if someone of you here in the call want to discuss what like this is exactly, or want to add a point in here, like feel free. Fedi is kinda like uh, a bank. So if I'm not wrong, but uh, which is very small, like community. For example, you are living in a village and you know everyone else in the village, and the people from the village have come forward and started their own sediment. So that's what sediment is. Now, exactly how it works, I'm not pretty sure about sediment, exactly how it works and all. But maybe if you guys have an idea of like how it works, then feel free. Or if anyone wants to talk about any of these, go on.
Sure. So like as we were touching upon layer twos, so yeah, Lightning Network is pure native Bitcoin layer, pure native bit to Bitcoin as a layer two. It doesn't use any externalities. It is just only used to do instant payment settlement of sats or and bitcoins, so it doesn't need any of other tokens. But unlike lightning stacks, which not just does instant settlement, it also offers smart contract based system on top of bitcoin. So in order to incentivize some of the miners in them, they they use these other tokens to incentivize, sort of like Ethereum and other altcoin, where they pay gas fees and other things. So it's not fully acknowledged to be a native Bitcoin protocol, but it's sort of, I think, tolerated at the moment, stacks as such. But yeah, not as much as Lightning and in fact RGB and other things seems to be superior compared to stacks, as such. But I'm quite I was of the opinion that the stacks as a company and everything is not much into discussion, but surprised to see it being mentioned here. Uh, yeah, that's what it stands for. And Fediment and Cashew, yeah, they're like like you said, they are in a community, they're in a group. It's sort of like a panchayat system where where you go if you have any problem, if you have anything in your village or in your community, you just go to some 3 4 people who are head of them, and you ask them to resolve your problems as such. So it's sort of like a community custodian service of Bitcoin, and it is a lot more better than individual multi-sig, those kind of setup. But yeah, it is fully functional, but its adoption is still growing. I haven't come across a news piece or anything of that sort where it is widely accepted either in Africa or any other place, or even in even in El Salvador for that matter, where Bitcoin is so widely popular. Even over there, Fediment is not as much as widely used, but it's functional. It is effective as a community, as a community custodian of Bitcoin and cash. And yeah, it's sort of like municipal bodies and other things that they can use, but I think a lot of them are still is still sort of deciding whether they should hold ETFs or bitcoins in Fediment, and that sort of debate constantly keep happening. But yeah, underneath the technology is multi-sig with a combination of with Chomi Cache system, where there's a central there is a slight dependency on the centralized entity, uh, just slight, but but still, by and large, the protocol stays true to the decentralized spirit, and it works that way.
Yeah. Thanks, Ashok, for a brief info. So basically, I have asked before the session for these people to help me to whenever you can, because I am not uh, aware about what are these protocols doing exactly. So yeah, thanks. I think we have also started a pediment in BitLabs, if I'm not wrong. Goa this year, last year, sorry.
Yeah, I think we did have one session on pediment.
Yeah,
Yeah, we have a Bitshala sediment, and I think plebs together also has a sediment.
yeah, yeah,
So
yeah.
people can chat there, people can pay for. They all have eCash tokens inside it.
Okay, okay. Uh, Coming to now the most revenue generating thing out of these protocol nodes is basically the miners, the public Bitcoin mining companies. So these are the revenues of these public companies in 2025 TTM. So this report came out in, I think, end of December. So you can assume it as 2025. So around $4.5 billion worth of revenue was generated uh, in the whole of Bitcoin mining sector. This sector has also diversified itself into AI compute. I know many companies have set up AI data centers, or if I'm not I know some companies who have started running AI data centers as well. Then sequencers here, they say sequencers perform a similar function as Bitcoin miners, transaction ordering, but for integrated protocols with Bitcoin using proof of stake consensus algorithms primarily associated with rollups. Just as mining companies operate Bitcoin miners, integrated protocol companies run sequencers. It's still early days for rollups out of Bitcoin. Most are currently in testnet, but to get a sense of the market size, Coinbase runs a sequencer for the base protocol, which, as of this writing, generated $8 million in revenue over the past 30 days. When I read this, I think this is crazy. I mean, 30 days they have generated $8 million, but I don't know what they are doing here. Sequencers. So here, do they have given the sequencers? Citria, Alpen, and Lightspark. Okay, so here they have missed Coinbase to give as an example. But what exactly are they doing? I don't have a good idea. But one more thing that happened in the protocol node is BitChat. Jack Dorsey vibe coded this app, BitChat, which leverages Bluetooth mesh networks to communicate P2P across devices rather than relying on the internet. Then Quale integrated Cashew into this P2P payment, into this for P2P payments. So this was kind of crazy project built by Jack Dorsey, BitChat. I used this in Goa, I think, but after that I have not used. But yeah, I think it's a technology and it can be used. It works, and there are examples where people use this bit chat when internet was not internet was shut off in some protest. I think if they have mentioned here, yeah, BitChat saw my massive spikes in adoptions following social protests in Madagascar and 50,000 downloads during Nepal protest, right? So with hundreds of thousands of downloads, P2P tech is changing the landscape of social coordination, and we are witnessing the power of private P2P money at its advent. So this is what happened in Nepal. Um, Now, politically, let's not go into that, but this is a technology which can be used by a common individual. Now, coming to protocol middleware. Here comes mining pools, relays, node operators, bridges, oracles, developer tooling. Now, node operators, businesses that professionally manage node infrastructure, Lightspark, Breeze, Voltage, ArcLab, Citria, Ibex. Mining pools. Now, mining pool, I have like a good idea of what mining pool is. So, let's say you are maybe Shivam has much better idea. I think he has also covered this in mining club. So, but still, because we are discussing it here, mining pool is basically where you can pool in your hash rate, and based on the percentage of hash rate which you pull in, you get rewards from the Bitcoin blocks and subsidy and transaction fee, whatever is generated, they give you like percentage share of your hash rate which you pooled in. Now there are various versions of it. Uh, uh, I am not able to recall, but uh, some versions like do it. Let's not go into that, but there are different versions. Ocean is one of the like most transparent. I think many people support Ocean. Uh, I'm not sure how exactly Ocean works, but it is kind of like we you are pulling into Ocean, but uh, Shivam, this question can be tackled by Shivam, but F2 pool, Foundry, and pool and brains. Brains, I'm not sure, but these all and pool, Foundry, and F2 pool, uh, they have got allegations where if the like very large transaction fees is collected, they don't pay equal share to the person who is providing good hash rate. But with Ocean, it, I'm not sure if it is. It's in between these pools and solo mining, so it's much more similar to solo mining. But why these pools exist? Because the current difficulty of Bitcoin hash rate is too high. If even if you buy few hundred terahash machine and you start to run it um, like solo, you the probability of you hitting a block is not good, and that's why people pull in. And when you pull in, uh, because like for example, you have 100 terahash machine and some other 10 guys have another or 9 guys have other 100 terahash machine. Now when you pull in, you have 1000 terahash. The chance of you guys hitting a block increases when you pull in, and that's why these pools exist. It's a good business to be in. They take a small fee from all of us to basically whoever is pulling in. But yeah, this is what all I know about pools. Then comes relays, data storage and relay for adjacent protocols that interact with Bitcoin. RSK relays, mixing relays, relays. So is it something to do with Noster? I'm not sure. If anyone of you has an idea, feel free. Bridges, software that locks BTC on Bitcoin to back tokens to other protocols. I think WBTC, yeah, wrapped BTC comes here. Multisig, BitVM, Nomic, MBTC, BitGo. These are all the examples. Oracles, software that calls external data and puts it on chain. Lava oracles, Atomic Finance oracles. Developer tooling, platforms providing standardized developer tooling across protocols. Jolts, Galoy, Spiral, Breeze, voltage, BDK, LDK. So Galloy is something which offers a backend to a bank which wants to do something with Bitcoin, if I'm not wrong. Yeah. Now, protocol middleware is done. So if any of you has a point in here to share, please feel free to.
I wanted to share in mining pools. Like there are
Yeah.
some mining pools which allow templates to be filled in directly by individual miners, and there are some in which templates are completely centralized. So, like, what is the transaction that gets picked, uh, and other information. So, I think Ocean is one of the protocols, and Stratum V2 also. Ocean is a mining pool. Stratum V2 is a protocol on which there's demand pool, for example, is is already out live. They have not created any block, but it's out live. So these two pools are, I think, where you can individual miners can create their own templates. But in the other cases like F2 pool, Foundry, and pool, I think the templates are centralized. So that's one thing that I wanted to add there. And in developer tooling, I think most of these tools like Zolts or Galloy or Spiral or Breeze, they are solving for how do you make it easier for any developer to just start producing an end users application without having to bother about like spinning up their nodes or like finding out the rebalancing of lightning channels or writing elaborate fiat to Bitcoin off ramp and on ramp. So yeah, there are all these kind of different developer tooling solutions that are getting built by different companies.
Yeah. Yeah.
Just a question to you, Saurabh.
Yeah. Yeah. Go on.
Yeah.
Yeah. So you have mentioned about templates, right? So does that mean you're mining the configuration that's being delivered? I mean, the power or hash rate that's being delivered to the mining pool. Do you configure that?
So the hash rate is something that is there in your machine. So it's measured in terahashes per
Hmm?
second. So you deliver the same terahashes per second, but you can pick up your own templates. By which I mean that you can pick up your own in the mempool. I think you can create your own. You can stack your own transactions and then broadcast it to the uh, then you can broadcast it to the pool. Uh, in other cases, like for example in F2 pool, the transactions I think are picked up by uh, the central authority, and individual miners mostly are just limited to providing the hashes. So it's more decentralized if individual miners have the freedom to create their own templates.
Okay, by that you simply mean that you have the independence to select transactions. So template is equal to a set of transactions that you are selecting from the mempool. Is it?
Yeah. Template is basically like the uh, complete block information. So it will include the hash of the previous block. It will include timestamp, all of this information and
Okay.
transactions.
Okay. Plus the transactions that you are picking from the mempool.
Yes.
Okay.
Bala, is that right? If Bala can hear me.
Uh, yeah, templates are your block template, which includes this kind of previous block and transaction. Except that one small correction is that Datum offers you doesn't let you pick your own transaction. It sort of gives you a choice of templates. So you get, I think, three different types of templates which you can choose from.
Oh,
So one template will be devoid of any data transactions. So if you are like ideological and you want only monetary transactions to be mined, you can like configure your miner or hash rate to use that template. Uh, yeah, but the actual picking is done by Datum, and they offer you a choice.
Oh, okay. So yeah, I mean, I was wrong then. It's not completely a choice. It's you still have to pick amongst the template that the datum centralized uh, operator will provide you, but you have more choices.
Yeah.
Got it. Got it, Bharat.
Yeah.
Got it.
And also, if you have like more doubts, I think Shivam is the person who can answer. Bala also has like tremendous knowledge. Bala, Shivam. So there is also mining pool which happens on Tuesday. So if you want to know more details, I think uh, that is the right place to like go in and have a chat.
Yeah.
Okay. So now coming back to one more thing which I wanted to discuss here. Uh, we did a session, this rescindance of SAB 121. So, in the light of repeal of SAB 121 under the Trump administration this year and amending subsequent bank adoption of Bitcoin, Epoch wrote a deep dive into bank adoption with former CTO of Silvergate Bank. We anticipate a middleware in this category to expand the following following this graphic. Now uh, this is very, like, I don't understand how is this going to work, but what I can tell you is what was SAB 121. So SAB 121 was a rule wherein, let's say you are a bank and you have Bitcoin in your balance sheet, then you have to treat Bitcoin as a liability and not as an asset when you buy Bitcoin in your balance sheet. If you are a bank, not not a company or like not a different. This was specifically for a bank. Now, when you treat Bitcoin in your balance sheet as a liability, what you have to do, let's say you buy $1 billion of Bitcoin, then you have to also buy $1 billion worth of cash or US treasuries. Because of this, the adoption of Bitcoin from banks was slowed down. Now, after the repeal, this is not applicable. So you can treat Bitcoin in your balance sheet as an asset. And when that Bitcoin becomes your asset, you can build different financial products and do financial engineering with your Bitcoin, like offer loans, do something else, and like many things can be done, which have started to happen as well. So this was the point in here. Then it is an estimate, like how much mining pool annual revenue estimate. So blocks per year 52,560, block subsidy 3.125, fees as a percentage of total 10%, block reward this 3.4375, Bitcoin price 100K. So USD block reward is around like 100,000, then 100 million. Is it like 18 billion? USD 18 billion of block reward. Blocks mined via pools is 80%. Mining pool fee is 2%. So out of this, like 289 million was mining pool revenue as a assumptions of December 2025. So this is the mining pool revenue. Then here, I think I don't have anything to discuss in the second, the middle layer. Now comes the third layer, native applications and platforms. P2P payments, B2P payment protocol, basically Bitcoin. Then P2P lending, Debify, Atomic Finance, Hodl, Firefish. So all these are lending without giving full custody to centralized intermediary. P2P exchange, hodl, BISC, buy Bitcoin, RoboSat, SitePit. So I remember in the first Boss Summit which I attended, we had a brief on BISC, I think on RoboSats as well. I remember these two. Then comes P2P markets, derivative markets without giving full custody to centralized intermediary. LN markets, block spaces, Magma, Calideo, Swap, Peach, Bitcoin. I think I know LN markets. Real world assets, tokenization of tangible or intangible asset, Ducat, liquid, taproot asset. Now, liquid, I have done my research on uh, like Blockstream, to be specific, Blockstream funds. So, with the help of liquid, they have tokenized hash rate. They call it as Blockstream mining node, wherein you can buy that Blockstream mining node. Uh, uh, when you buy that Blockstream mining node, it's similar to you have bought a miner, but it's like a tokenized form of that miner which you can buy. Like Liquid enables this tokenization of hash rate. So they call it tokenization of hash rate in Blockstream. So they have this BMN Note 1, BMN Note 2. I'm not sure of BMN Note 3, but they also had one more product, PFF. It was a stable yield generating product. BMN is similar to miner, so it's similar to it will perform similar to as if you had a miner. Then comes digital assets, non-BTC assets that are represented or traded using Bitcoin protocol. Taproot asset, runes, ordinals, RGB, simple proof. Staking, lending BTC to add additional economic security to POS protocols. Botanics, Babylon, Merlin, Sovereign. Mixing, protocols that obscure connections among pseudonymous wallets. CoinJoin, Wasabi, Joinster. Mixing, I think this is used by hackers, if I'm not wrong. So if they hack some exchange and uh, they don't want to, they don't want their address to get flagged, they start mixing uh, these things, and uh, like it helps them to use that hacked asset. Explorers, tracks and organize protocol activity for applications, scan mempool.space. So I like this mempool.space. It's very easy to understand what's happening in the Bitcoin blockchain. Wallet, UI for sending, receiving Bitcoin transactions and other financial functions. Bitcoin Core, Phoenix, Blink, Wasabi, Moon, Blitz, Fedi. So these all come under native applications and platforms. I think from this point, I start understanding what is exactly happening. Maybe you also can understand, like, you do not need a technical know-how of a lot higher level to understand uh, these businesses. Uh, NFT volumes, I think this is related to ordinals, but I'm not a big fan of this. So let's skip this. You can go through it, but NFTs on Bitcoin, I like don't support, or like I don't like. I want Bitcoin to function. Even like me and Ashok had a long chat in BitLabs in Goa, where Yashok made a point in where Bitcoin solves monetary network. Even if Bitcoin solves the monetary network problem, it has a huge TAM if Bitcoin solves this. And if we start diverting from this monetary problem into pooling in these NFTs and all into Bitcoin blockchain, I think this does not make any sense. And that's why Yashok said that. That's why I'm doing a session on Lightning here. So I want to shift focus from Bitcoin L1 to Bitcoin L2. Whatever you want to do, please do on L2. Don't disturb L1. So this was Yashok's statement back in there. Yeah, till here, if you want to add in something,
Not an
someone
ad,
has unmuted.
I'm done. Just a question. Like,
Yeah.
can you slightly expand on why Ashok said that do not disturb the Bitcoin L1? It's better you do everything on L2.
So, I mean, giving an analogy to gold, uh, gold is gold, right? So you can't change its atomic number and play with its atomic weight and call it gold. So it's better to shift innovation to L2 and L3 instead of innovating in L1 because it already has the product market fit. It is already solving the monetary network problem which we have due to in fiat system.
Yeah, go ahead and in short, Satoshi built it so robust
Also,
that we don't need to do anything on top of it. It's better we work on L2 and keep innovating over there.
Yeah,
Go ahead and thank you.
also, Ram, I think because the block space is limited,
yeah,
uh, it's better to make use of that block space for productive purposes. Uh, some people, and there's a contest which is like, if people are legitimately paying for the block space, should it matter what they're doing with that? And I mean, uh, that's a that's a value judgment call. But effectively, Bitcoin was meant to be money. So let's not abuse the block space, which is publicly available for everyone, to put stuff which it was not supposed to carry, right?
yeah,
So that's the whole idea. That's the whole argument.
Yeah, exactly. It very much it's slightly against the very motive of Satoshi. So I think it is
yeah,
okay.
true, true. Okay, now coming to consumer financial services.
A quick point here as well, and I
Yeah,
mean,
yeah, sure.
and also to the fact that uh, what being in software for a long time, what you'd realize is the less you do, the more stable your software is. So the more things you do, the more you'll have to worry about whether there could be some bug, some inflation, or some sort of inflationary response that you might end up doing to the system, and it can turn catastrophic as one small bug and one small opcode mismatch can be so catastrophic. So you want to avoid any sort of future surprises, along with the fact that it is like Saurabh and Amda mentioned, it is for pure monetary use case, and we want to avoid all software risks of the future as well.
Yeah,
Comes rather principle, Ashok, I guess.
yeah. And just to add in there, Michael Saylor himself mentioned what is the biggest risk to Bitcoin, where he said highly funded developers who like want to build something. So Bitcoin is already working. So we do not need anything except quantum. Uh, but we do not need to tweak into already functioning system. So it's better to like leave it. Satoshi also left it. So why do we want to like change and upgrade whatever else is happening? It's better to leave that. Yeah. Now coming to consumer financial services. Now here, it's much more easy to understand what's exactly happening in here. Exchanges, basically Cash App, River Financial, Swan. Coin Corner, Bull Bitcoin, Strike, Relay, and many more. So exchanges for fiat currency to Bitcoin with centralized custody. Then comes lending, custodial lending platforms, Ledon, Nexo, Lava Finance. One good thing about Ledon, which has happened, if I have that tweet shared, I think I have shared that in TradFi and Bitcoin, if I'm not wrong. Yeah, if you can see my screen, S&P Global Ratings have assigned a preliminary triple B minus rating, credit rating to a Bitcoin-backed loan securitization product from Ledon. So it's a like institutionalization of credit markets. It's a good thing happening in here. Okay. Now coming to markets, custodial order book for alternative markets. Example, hash rate derivatives. Luxor, Roxxon, LN markets. Luxor, I think uh it's a hash rate derivative where you can trade. LN markets, it's similar, but Roxxon is Bitcoin denominated exchange. So basically, you can trade equities, derivatives, gold, metal, commodities, all denominated in Bitcoin. So the end goal of you is to accumulate more and more Bitcoin. And if you want to do that, you have to like uh, see things in Bitcoin and not in USD terms. So that's why Roxxon exists. Then here, I think they have custodial order book of alternative markets. I'm not sure if Roxxon fits in here, but you can like more or less it is fitting. It is a capital market on Bitcoin. So yeah, on ramps slash off ramps, API infrastructure between banks and applications, bring in Oreo, e-commerce payments, sending and receiving Bitcoin payments for businesses, Zaprite, Flash, Open Node. I think one of the thing was built by our Bitshala fellow NEP, what he called pleb QR. So it can also be used as a e-commerce payment. I'm not sure, but POS settlement. So it's like a QR code. If you are a business accepting payments, let's say you are a Kirana shop, and instead of having Google Pay QR, you can have this pleb QR. It's in development stage, and 256D is in the back end. But yeah, products are getting built in here as well. Then point of sale settlement, Square, BTC Pay, Muscat, Opago, Tando. Treasury management solutions enables Bitcoin transaction and position management, Castle. Then personal finance solutions, cards, rewards, vouchers. I think Bitrefill and Fold. Okay, it comes here. Fold is something, it offers Bitcoin credit cards, if I'm not wrong. Bitrefills is rewards and vouchers. Azetco, Oshi. Then remittances, applications and infrastructure for international remittance payments. Strike, Crobo, Neutron Pay, Osmo, Guap. So Crobo is what Abhay has. It's a product where like uh, people in the US can remit money in from US to different developing nations to their. For example, you remit using traditional banks. Remittance fee is pretty high, like 4-5% easily. So instead, if you use Bitcoin, the remittance fee is much less. I think India is one of the highest highest nations who receives remittances from all over the world to India. Uh, I think 100 billion I'm not sure on the numbers, but it's a like a large number which India receives as a remittance. So good market is in here for remittances. Wealth management, comprehensive wealth management services for Bitcoin, bespoke sound advisory, Basilic, Bitcoin Financial Advisors Network. This I have not heard, but it is like wealth management services for Bitcoin. What they do is they might have some portfolios where they advise you what or how much portfolio you should have in Bitcoin or something similar might be happening. Then tax applications for tax accounting for Bitcoin, Coin Ledger, Coinly, token tax, TaxBit. I think one more similar product is in India, CoinX. Uh, if I am not wrong, they also help in taxation related to crypto and not necessarily with Bitcoin, but yeah. Then comes life insurance. I wanted to do a session in Bitcoin denominated life insurance fund. Meanwhile, I reached out to their founders, but didn't got the reply. But let's see. Like I have to study in how the model works and what things are happening. Maybe we can do this in one of our future sessions. But yeah. Shared custody solutions, collaborative custodial solutions using multi-signature technology, Unchained, Casa, and Thea. So multi-sig solutions, I think most of you are aware of this. Home equity Bitcoin lines, platforms slash lenders converting home equity into Bitcoin exposure. One of the like a product Horizon is doing this on a good scale in the US. So how this works is uh, your home equity, basically, let's say you have a home in the US and you have like equity. I'm not sure how the product exactly works, but uh, just to give you an overview, maybe they have given the overview here: home equity, home equity, home equity. Okay, no, they have not mentioned home equity, joint horizon. So it's something like your equity is given to is somebody unmute. Okay. So it's like, for example, in a financial sense, you have a home which you live in. That home is not your asset. It's a liability in financial sense because there are maintenances and whatnot, taxes, everything else. Because of that, it's not an asset. But let's say that home equity is just sitting in and you can't do anything with it. Now, what they say is give us some of your home equity, and in return, uh, we'll help you to buy or have an exposure to buy Bitcoin and have an exposure. We have to see like how exactly the product works. That's why I said like all the companies here, examples, it's a separate separate case study which you can do by yourself to understand what exactly are they doing. So I think what else is remaining? Institutional financial services, then physical infrastructure, then comes the Bitcoin economy. Okay, so I think it's 9/6. Maybe we will come to these products next session.